Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of the UVIX, which is the 2x long VIX futures ETF, ticker symbol UVIX. And so here I'm looking at the chart on the evening of October 9th after the UVIX closed at a price of $5.47, being down a little less than 5% on the day. And so I wanted to go over this because I think it's a really nice way to kind of capitalize on the volatility in the markets. And, a good indicator for that is looking at the VIX, ticker symbol VIX, the volatility index. When that goes above 20, or closes above 20, maybe there's going to be some volatile moves, and it's been above 20 the past few days, closed above 20 today, but it does look like, it's going to be a similar chart as this one, because this one does track it. It's just about 2x what the VIX is. But it does look like we just recently hit a top on Monday, October 7th. We hit a high of $6.35, going up 17% on the day, so a really nice move there, but it does look like it's pulling back. So I kind of wanted to talk about, why I think it hit that top, why it pulled back, and where it might be going to. And so just looking at this more recent price action here, these are the daily candles. We can see this yellow Fibonacci retracement here going from the low that was hit on August 30th at a price of $4.03, going up to the high that was hit on September 9th at $6.70. So from that Fibonacci retracement, we can see the 786 here, which is at $4.60. We did break below it. So, that wasn't really a good level for predicting where that bottom might be. But from this low, I now have this trend line here based on those two lows. So, if we do pull back to that, wherever that is in the future, I think that would be an excellent dip buying opportunity. But I suspect we will be finding our bottom before we get down to that level sooner than, when it would take to intersect with that line, which would be, very far out into the future if we did pull back down to it. And, didn't come down to around $4.40, which is what it would come down to now if it dropped down to that level. But I don't think that's going to happen. And so one other thing you might notice here, I do have this other Fibonacci retracement here going from that high of September 6th and coming down to the low of September 23rd, which was at a price of $4.20. So that's always a fun level to hit for a number of reasons. And, that was a great dip buy level, and because from there we did go up about 50%. So a very nice swing there. But when we did go up there, we bumped into the 786 from that Fibonacci retracement at a price of $6.17. Did close above it, but did not get a secondary close above the high from that day, which, as I had mentioned, was $6.36. We instead got rejected. And it looks like we got rejected from this downtrend. So if I do take a step back from, this big move that we saw from August 5th when the markets gapped down, the UVIX gapped up. So that was a very nice trade. But prior to that big move up to 1997, the high prior to that big move, we do have the high from July 25th at a price of $7.32. And so from there and the high from September 6th, I've got a downtrending level. And from that, we got rejected. And so I think that's pretty cool. So I just wanted to point that out. But, where is it going to be pulling back to? And so for me personally, I have been trimming my position on the way up, averaging probably around 15% gain, but ranging from, I think, 10 to about 30%, just doing it kind of arbitrarily based on my position, my average. And my average is around $5. I believe it's a little under $5. And, I would like to get more UVIX, but I don't want to be raising my average. So what are some levels it might be pulling back to? So I've already done a Fibonacci from the low of 420 up to the high from this past Monday of 635. I just grayed it out, so I'm going to bring it back into picture. And we can see these nice, soothing, light blue lines. We might be finding bottom around there. And so the first one that I have marked is the 50% retracement. That is at a price of $5.27.5. We are getting very close, so maybe we find a bottom there. But I would be more compelled by a retrace to the 618 at a price of right around $5 a share, or specifically $5.02.1. And the reason why I find that one to be more compelling than the 50%, the reason is because the 50%, we don't have much below it. You know, we got some trading above it. It had acted as support, but had it acted as notable resistance? Not really. But over here, the 618 has acted as notable resistance, not only over here, but also $5 over here. So there's a lot of kind of cushion underneath that level, also $5 being a psychological level. So I think price could be coming down to right around there. But if it does break lower, the 786 is around $4.66. We do also have some consolidation below that level, so that could be acting as support, as we did pull back to more than the 786. As I had mentioned, that was at 460. That is a pretty similar level to this 786. We did get some, like I said, consolidation below it. So with the UVIX, I am looking for a retrace to $5 to pick up some more, to take some more profits as it does go higher. But what I think, you know, is pretty interesting with this is it could be consolidating below this downtrend, and then maybe after the election, maybe after inauguration, maybe after the holidays, who knows? Maybe we see some volatile moves to the upside like 1997 over here, but maybe it happens sooner than that. Maybe it happens in the month of October. But for me, I'm happy taking 10% swings, no big deal. This is just a nice in and out play for me, and I thought I'd share it with you. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Thank you so much for watching. Take care, you guys.